Hi everyone, Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. Welcome to State of the Market, and make sure you hit subscribe so you never miss an upcoming episode. Now, sometimes it does seem like it's easier to break up with a partner than to sell a stock. I mean, after all, there are 50 ways to leave your lover, but really only one way to exit a losing position, and that's by selling. Now, there's no slipping out the back, Jack, when you have a losing position, and you certainly don't want to be coy, Roy. When a position is going against you, you need to take the advice of 80s supergroup Scandal. Guess it's better to say goodbye to you.
Goodbye to you. Goodbye to you. Goodbye to you.
That's easier said than done. Buying a stock is easy. Selling a stock is hard. Here's why. When you buy a stock, you're full of hope and optimism. It's a positive emotion. When you sell, even if you're selling a winner, you're removing that emotion that you've enjoyed when the stock has been going higher, and no one wants that good feeling to end. So many investors, they hold on too long to a winner even when the stock starts to decline because they assume it'll bounce and they want to hold on to those positive feelings, hoping they'll return. When a stock is a loser, selling and taking a loss confirms the mistake, which is a hard thing to do. But usually once you sell a loser, you actually feel better than hanging on to a painful situation, much like a relationship. It's why you need to have an exit strategy. When you enter the position, you don't want to be trying to figure out how to extricate yourself from the position in the middle of the trade when emotions are likely running hot, either because you have a nice winner or because you have a bad loser. Now, some investors set price targets as a spot to take their profits. Now, generally, I don't like to do that because stocks will often run higher than you think they will. So you should try to let your winners run. That's why I use trailing stops. If the stock falls, you know exactly what your maximum pain threshold is before you enter the trade. So let's say you buy a stock for $40. Now, if you decide a 25% loss is the most you can handle, you'd set your stop at $30. Now, let's say the stock immediately drops and it's trading at $33. You're kicking yourself for the boneheaded buy that you made, but you know there's really nothing left for you to do because you can calmly wait and see if the stock bounces because you know you're getting out at $30 if the stock continues to fall. Okay, let's say the stock does continue to fall and it hits $30. Where a lot of other traders are going to try to justify holding their positions, the fundamentals look good, the stock is oversold, whatever the reason is, they're going to come up with excuses to try to hang on to this position. But your stop takes you out of the position without having to think about it, and it allows you the freedom to not have to make a decision in the middle of a heightened emotional state. Now, let's say that stock continues to drop to $25. You're already out. You've moved on, while the other traders are still justifying their position, kicking themselves they didn't get out, and praying that the stock gets back to $30 and then they'll get out once it rebounds to 30. On the other hand, let's say the stock is a winner. It moves higher. You can raise your stop to protect your profits. Perhaps at $50, you raise the stop to $40 so a gain doesn't become a loss. At $60, you raise it to $45 to protect your profits and so on. If the stock reverses, you're out with a gain and on to the next one. No trying to convince yourself that the stock is going to bounce back to 60 and then get out. Look, we're emotional creatures. Trading and investing taps into those emotions, and it's easy to allow them to control your buy and sell decisions, but emotions are the worst enemy of a trader. Using a predetermined exit strategy will allow you to hop on the bus, Gus, and never look back. For more information on how to use trailing stops to limit your downside and protect your upside, check out my free webinar. Just click on the link in the description to register for free. Thanks for watching. I'm Mark Lichtenfeld. I'll see you next time on State of the Market.